So are you wondering what's going on in the housing market? Well, existing home sales numbers came out yesterday and they were down. They're down over 4% month over month. And that's because interest rates matter. You see, these numbers are from the month of March, and rates were right around, if not in the sevens. And in February, rates actually went down in the beginning of the month. So you had a whole bunch of people come to the market that were sitting on the sidelines. And that number in February exceeded expectations. Well, the number for March actually missed expectations because interest rates matter. Now we're still on pace for over 4 million home sales this year for existing home sales. So all of those people thinking nobody's buying, that's a fallacy because there's going to be over 4 million home sales. Now, will there be over 6 million home sales like there was at the height of the pandemic? Absolutely not. But to think nobody's buying a home because the interest rates are where they are, that is just not correct. In fact, we need more inventory for the more affordable homes and beginner homes, starter homes, because that's where I see the most pushback and competition right now. If you look here in the greater Charlotte area, I was talking to some colleagues real quick. If you're part of a firm and need a new place or want a new place to grow your business and just be in a environment that's cultivating and pushing you for growth, please consider lifestyle. But I was in a meeting and we were talking about what we're experiencing. And around the $400,000 to $500,000 mark. If it's in a nice area and great schools, we're seeing those homes going for above asking right now, significantly above asking. Here in the greater Charlotte area, we had some clients for the firm put in an offer over $15,000 above asking price and still missed out because of the location and the schools in that area, and the home was move-in ready. It was perfect. So if you're on the sidelines thinking nobody's buying, that's not the case. But let's get back to the news. While competition is very high for homes, the starter home or the average home, average price home, anywhere from $350,000 to $500,000, homes that are above $650,000 are sitting on the market a little longer. That's where inventory is growing a little bit. So if you're in that price point or in that field, you might be able to find a deal and carve out an excellent offer and opportunity for yourself. Now, not every home is the same. The home is brand new to the market and your agent sees that it has 5 to 10 showings lined up as soon as it comes on the market. That property probably won't sit on the market that long. But I'm seeing a lot of opportunity for homes in that higher price point. You may be able to get a very good deal and to get a very considerable amount of seller concessions, whether that is to buy down the interest rate and or pay for closing costs. Now, you get with your mortgage broker or lender to see which one best suits you, whether you should get an interest buy down or use those monies for closing costs. Now, I know it's easy to get caught up in our own bubble, and here I am in the Carolinas in the greater Charlotte region, and we are seeing a strain on inventory. But to keep it in perspective, other parts of the country are seeing this type of strain, if not more significant. In Seattle, Kings County, inventory is down about 35% and pricing is up 20%. I can't even imagine that right now. If pricing was up 20% here in the Charlotte area, oh man, it would be chaos. Now, pricing is up compared to last year, but it's up nominally. Also, right now, I want to talk to you about interest rates and where they presently are. See, interest rates have been going up the past 2 weeks, actually past few weeks, because the economic data suggests that the economy is strong. And inflation has not been taken care of. Yes, it's come down significantly from the 8%, but we're still hovering around 3.5% right now. And the goal for the Fed is to get it to 2%. So the interest rates right now for the 30-year fixed came in today at 7.44%. And I do not expect rates to be cut anytime soon. I might say not even until after the election. A lot of people are hoping for a cut this summer. But if reports regarding the economy and inflation is still running hot, I just don't see how they can cut rates. Not when unemployment is still at near all-time lows. So if you're trying to time the market and try to time when you're coming in to buy a home, do yourself a favor. Stop it. Trying to time the economy and the market will only cause you headache and frustration. I say you have to act when you're ready to act. When you're in position to buy a home, you should do so. That means you should find something well within your budget so you can comfortably live and not be house poor. And do not wait for some outside force that makes you come to buy a home. Because as we saw in February, when rates went down, a whole bunch of people jumped to the market. So that can happen at any point. So stay ready as opposed to waiting for something to happen and occur for you to get ready. So many people are wishing the Fed would make a rate cut so that could in turn cause interest rates to come down. But our economy is just stronger than expected, stronger than most people believe, stronger than many people want it to be. Unemployment claims came out yesterday and they beat expectations. So that does not give the Fed any kind of impetus to reduce the federal funds rate, and you can expect interest rates to remain higher for a little longer. Until something breaks or something bad happens in our economy, that's when you'll see rates start to cut or come down. And that can come in the form of bankruptcies for companies and or people being laid off. Now, there has to be at a significant pace because, as we saw in the news recently, Red Lobster just filed for bankruptcy. Doesn't mean they're going out of business. They're just restructuring some of their debt. So it's important to look at all things when looking at the economy. Because while it may not seem like it, it does have an impact on our housing market.